This is Nightly Business Report with Bill Griffith and Sue Herrera.
Sentiment shift. Stocks rise to start the week, and many point to Wall Street's better mood.
Fighting cancer, Eli Lilly is the latest drug company to make a big bet on oncology as the science evolves and groundbreaking new medicines are discovered.
Pricing power. It's going to cost you more to go to Disneyland. But will consumers pay up? Those stories and much more tonight on Nightly Business Report. It is Monday, January 7th.
Good evening, everyone, and welcome. The big rally Friday extended into today. Investors started the week in a buying mood, snapping up shares of technology stocks as U.S. and Chinese officials talked trade and the price of oil rose. The Dow Jones Industrials rose 98 points to 23,531. The Nasdaq added 84. The S&P 500 was up 17. As usual, there was volatility, but there was also a sense of relief, which stands in contrast to what investors were feeling not too long ago. Bob Pisani explains.
It's remarkable how much market sentiment has changed just over the past few days. Investors have had a long list of concerns, but they're finally starting to see some progress made on several fronts. There were worries about the Fed raising rates too quickly, trade talks going nowhere, Chinese economy slowing down, and a possible recession as soon as this year. Now, the Fed has softened its language on interest rates. Fed Chair Jay Powell reassured investors he's listening carefully to the market's concerns and that the Fed remains patient and flexible when it comes to rate hikes. Trade talks, the second issue, are picking up. High-level officials from both the U.S. and China are meeting today and tomorrow to try to hash out the terms of a deal. Third, there's some hope for the Chinese economy. Yes, it's slower, but China has announced stimulus programs to loosen liquidity and boost its infrastructure spending. Yes, expectations for earnings growth in the United States are coming down this year, but it could be a lot worse. Most of them are in the mid-single-digit range. Gas prices have fallen 20% since October. That is a huge tax cut for the American consumer. All right, how about this fear of a recession thing? Stronger jobs growth and the comments from the Federal Reserve, I think, are fending off those fears, at least for now. Now, the one major wild card definitely out there is political risk, both here in the United States and overseas in Europe. The fate of the UK and Brexit, that's murky. And now here in the U.S., now that former U.S. Defense Secretary Jim Mattis and other key moderates are gone, some are worried that maybe it is President Trump and not the Fed who might make some kind of policy mistake. Here's the bottom line. We are certainly not out of the woods, but the trend is definitely improving. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Well, let's talk more about this possible shift in sentiment in the stock market. Christina Hooper is back with us tonight. She's Chief Global Market Strategist at Invesco. Christina, good to see you again. Welcome back.
Good to see you.
So of the two primary issues that Bob brought up there, the Fed and the trade tiff with China, are you feeling better about those as well?
I'm not feeling a lot better about either one. Okay. While I hold out hope that the U.S. and China resolve the trade issue, I'm very realistic that it's unlikely that we'll see a resolution anytime soon. Bob reported on how China is increasing domestic stimulus. To me, that's a sign that it is hunkering down for what could be a protracted fight with the U.S. regarding trade.
And what about the Fed, Christina? I mean, there was some confusion early on, and then just last week, it seems as though the market was kind of soothed by what the Fed chief said.
Well, certainly the market was temporarily soothed, but we need to see more than just words. What's going to be critical is the FOMC meeting, the statement coming out of it, to see if the language has become more dovish, if there's more reiteration that the Fed is truly data dependent. What could really boost markets is if the Fed came out and said it's also examining balance sheet normalization and considering whether or not to actually keep it on autopilot. Those are all things that could truly soothe markets for more than a day or two.
So what are you doing about that as far as investing in this market? You go defensive, more to cash. What are you doing here?
Well, we always maintain a very long-term perspective, but for those who are thinking about the shorter term, you certainly need to be prepared for more volatility. Now, some view that as a real opportunity. If they have cash on the sidelines, that can present attractive purchase opportunities for investors. But for those who are worried about volatility, that have trouble stomaching it, it is important to be very well diversified. And that includes not just equities and fixed income, but having exposure to alternative asset classes. Things like real estate, gold, tend to move in a less correlated way with stocks, for example. So that makes a lot of sense in this kind of environment.
Diversification is the word, I think, yes. Christina Hooper with Invesco, thanks again for joining us tonight.
Thank you.
More now on those trade talks. A U.S. delegation arrived in China for those discussions aimed at ending the tensions that have imposed billions of dollars in tariffs over the past year. Ilan Mui reports tonight from Washington.
This is the first face-to-face meeting between the U.S. and China since President Trump and President Xi sat down for dinner at the G20. Trump discussed the prospects for a deal during a retreat at Camp David over the weekend, and he told reporters that he is hopeful.
My relationship with President Xi is as good as any relationship that a president here has had with a president or leader in China, and I think good things are going to happen. As
for the Chinese, the finance ministry says it has, quote, good faith in these 2 days of talks, which are really more of a technical meeting of senior officials. Deputy U.S. Trade Representative Jeffrey Garish will be leading the delegation. There are also folks from Treasury, Agriculture, Energy, and State. One good sign? Chinese Vice Premier Liu He apparently joined the talks for at least a little bit. The expectation is that he could come to Washington to meet with Treasury Secretary Steven Mnuchin and Ambassador Robert Lighthizer if all goes well. Today, Commerce Secretary Wilbur Ross defended the administration's hardline stance. He said China has realized how dependent it is on the U.S. economy.
What will come out of it is a resolution. Are we going to go the negotiated route, or are we going to go in the original direction of higher tariffs? It's really a binary set of decisions.
There was also a report that President Trump could meet with China's vice president at the World Economic Forum in Davos later this month, but the White House is not confirming Trump's schedule of meetings just yet. We do know that Trump will be there, the Chinese will be there. We'll see if the two sides will sit down and talk. For Nightly Business Report, I'm Ilan Mui in Washington.
Elsewhere, oil prices are creeping back toward $50 a barrel. The Wall Street Journal reports that Saudi Arabia plans to make new cuts to its crude exports beyond what's already planned in an effort to push prices even higher. Prices have also gotten a lift amid the perceived easing of trade and economic concerns. So domestic crude today settled up about 1%.
Eli Lilly is pushing further into the cancer drug industry. The pharmaceutical company is buying Loxo Oncology for about $8 billion in cash, making this the second major healthcare deal of the new year, both focused on cancer. Lilly's CEO says that acquisition will help the company treat the disease globally.
We'd like to grow our presence in oncology. Right. We have a good set of medicines there, but we'd like to expand that because there's so much exciting science for patients emerging in oncology, so many things to invest in. Loxo was particularly attractive to us because it's so rational that you can detect the kind of problem that's driving the tumor growth and then block it directly.
Loxo soared on the news, up 66%, and Eli Lilly's shares also rose.
Our next guest is hoping that this year may be the year that the world of medicine finally outsmarts cancer. Kevin Conroy is the CEO of a company called Exact Sciences. He joins us now from the JP Morgan Healthcare Conference going on in San Francisco right now to talk about this. Kevin, good to see you. Thanks for joining us tonight.
Thank you, Bill.
I have to say, I mentioned this on Twitter earlier today, and a viewer tweeted back and said, you know, I've been hearing for years that medicine is hoping that they finally have turned the corner on cancer. What makes you think that this year may be the year that you have outsmarted cancer?
Well, what we're seeing is the research that we have done with the Mayo Clinic to be able to detect the tiny changes in DNA that cancer sheds into the blood. So with a simple blood draw, we've shown the ability to detect 95% of liver cancers from that simple blood draw. And we're expanding this research across 15 cancers with the Mayo Clinic. And we're really excited about the prospects for changing the way cancer is detected and therefore treated.
Yeah.
And you basically gave us three things that you hope will be achieved this year that will change the dynamics in treating cancer. They are new discoveries through industry investment, and you mentioned the fact that companies need to continue investing in here, cracking the cancer code through the liquid biopsy, which your company is doing, and putting the patient first. It's a very dynamic set. Putting the patient first was something that I noticed because a lot of patients are not compliant with those tests.
Well, that's right. And that's the problem that we wanted to solve with our Cologuard test, which is a non-invasive way of accurately screening for colon cancer right in the privacy of your own home. And using that same technology, which empowers the patient to take care of their own health. We think that we can really change the dynamic, and a lot of other people are working on this too, which gives us great hope. We know that cancer is a disease of the DNA, and if you can detect that cancer DNA in blood, you can really change the way cancer is treated, because early detection really matters.
You know, it's not lost on us, Kevin, that 2 companies have already been taken out this year involved in either cancer treatment or cancer detection. Celgene last Thursday, Loxo today. This is something your company's involved in. You have a market capitalization of about $9 billion, and I can already see from the expression on your face, you can see where I'm going here. If somebody called you and said, we were interested in buying your company, what would you say to them?
Well, I can tell you we've been working on this for the last 10 years, and I have never in the last 10 years been more excited about the future than now. And so what I would say is we can't wait to keep doing the work that we're doing, especially with our partner at the Mayo Clinic, and I'd much rather do that from a position of being able to make those decisions and innovate in a way that can help people. That is our goal, and it's going to continue to be our goal.
Kevin Conroy, the CEO of Exact Sciences, thanks again for joining us tonight. Appreciate it.
Thank you.
It is time to take a look at some of today's upgrades and downgrades. Google parent Alphabet was upgraded to buy from hold at Pivotal Research. The analyst cites Google's dominant digital ad business and says the company is better managed than Facebook. The price target is $1,240. The stock fell a fraction to $1,075.92. General Motors was upgraded to outperform from market perform at BMO Capital. The analyst expects improved profitability and higher free cash flow. The price target is $41. The stock gained 3% to $34.36.
Micron Technology was upgraded to outperform from market perform, also at BMO Capital. The analyst there says the stock has likely bottomed after a 35% decline over the past 6 months. Price target now is $50. Shares rose about 4% today to $34 even. Altria was downgraded to market perform from outperform at Cowen. The analyst sees tumultuous times in tobacco and is forecasting further declines in an already deteriorating U.S. cigarette market. Price target has been lowered to $53. That stock fell 3% today to $48.78.
Still ahead, why an ugly stock market could be bad news for the finances of the nation's largest economy, California.
The economic tensions between the U.S. and China have not exactly stopped Tesla from breaking ground on a new factory in Shanghai. The electric car maker is forging ahead with plans to ramp up production in that critical Chinese car market. Eunice Yoon has more for us tonight from Shanghai.
Elon Musk described the new Gigafactory as just another example of Tesla's commitment to the China market. The Tesla founder was here in Shanghai to attend a groundbreaking ceremony for their plant, which is about a 2-hour drive from here. In tweets before the event, Musk said the company aimed to finish construction this summer and start Model 3 production by the end of the year and reach high-volume production next year. He added that the Shanghai Giga production would focus on the Model 3 and the Y, serving the greater China region. This factory will produce affordable versions of the models, he says, for Greater China, while the rest and higher cost versions would be produced in the U.S. for the worldwide market. The company plans to eventually produce approximately 3,000 Model 3 vehicles per week here and ramp up to 500,000 vehicles per year. The announcement comes at an uncertain time in U.S.-China relations when trade tensions are high. But Musk says that the move is going to be good for the company because it's going to help reduce some of that risk, reduce some of the expenses associated with transportation costs, as well as tariffs. For Nightly Business Report, I'm Eunice Yoon in Shanghai.
Meantime, Toyota is promising to expand the number of electric vehicles it plans to sell. But is it moving fast enough to keep pace with Tesla, which has become the leader in plug-in cars and SUVs? Phil LeBeau has more on the battle to win over buyers looking to go green.
It is a race between Toyota, the country's third largest automaker, and Tesla, the world's top builder of electric cars. Last year in the U.S., Tesla easily sold more electric vehicles than Toyota, which has just one model that plugs in, the Prius Prime. It's part of the Prius lineup, hybrid cars that run partially on gasoline.
The more powerful next-generation gas-electric Prius with hybrid synergy drive.
Prius popularity exploded 10 years ago, making Toyota the leader in eco-friendly models.
So our strategy is to continue to utilize and enhance our hybrids, our plug-in hybrids, and then eventually bring in battery electric vehicles as the market grows.
But gas-electric hybrid sales are slowing down, in part because cheaper gas limits how much money hybrids save compared to conventional models. Meanwhile, demand for electric cars is growing, especially in China, where Elon Musk has broken ground on a new plant to build Teslas for Chinese buyers.
I don't think there's any question that Tesla is seen as the real leader in pure EV vehicles now, whether it's just sales numbers, whether it's image and awareness and appeal. I think Tesla owns that now, and it's going to be hard to wrestle that free from them.
Toyota is undaunted. It's developing pure electric cars while planning to expand sales of hybrids.
We believe right now that hybrid technology in the short term for 19 and 20 is the best application for consumers today.
It is still early in the race to get more car buyers to plug in. While Tesla clearly has the lead, Toyota believes it will eventually have the models needed to charge up electric car sales. Phil LeBeau, Nightly Business Report, Chicago.
An activist investor wants Dollar Tree to raise its prices. And that's where we begin tonight's Market Focus. Starboard Value is pushing the bargain retailer now to start selling some items that cost more than $1 in order to raise revenues. Dollar Tree has famously kept prices at $1 since it was founded 30 years ago. Starboard also wants the company to consider selling Family Dollar. That's the struggling chain of stores that Dollar Tree purchased back in 2015. Dollar Tree today rose more than 5% to $97.96. Sage Therapeutics' oral treatment for postpartum depression has successfully met the main goal of a late-stage study. The company said today that patients in that trial showed a rapid and sustained reduction in depressive symptoms. And shares surged 42% on that news today to $139.13.
Roku reported a big increase in user growth, surpassing 27 million active accounts in the fourth quarter. Roku says that users streamed more than 7 billion hours in the quarter, a 68% gain year over year. That growth sent shares up 25% to 42.18. The New York Stock Exchange and the NASDAQ could see new competition. Morgan Stanley, Fidelity, and Citadel are among the companies planning a new exchange, which they say will provide a low-cost alternative to the major exchanges. That sent shares of Intercontinental Exchange, which owns the NYSE, down 3%, and the NASDAQ fell more than 2.5%. California's largest utility is reportedly considering bankruptcy protection. PG&E faces what could be crippling liability damages from a number of wildfires. The cause of the fire has not been determined, but an electrical outage occurred around the time and place of California's Camp Fire and where it started. Shares of PG&E dropped 22% to $18.95.
Well, with the new Congress being sworn in, there are new ideas floating around Washington these days, especially when it comes to taxes. During an interview with Anderson Cooper on 60 Minutes over the weekend, Freshman New York Congresswoman Alexandria Ocasio-Cortez talked about the super rich paying their fair share, invoking an idea from the 1960s.
Once you get to like the tippy tops, on your $10 millionth dollar, sometimes you see tax rates as high as 60 or 70%. That doesn't mean all $10 million are taxed at an extremely high rate, but it means that as you climb up this ladder, you should be contributing more.
The super rich in California have an outsized impact on that state's budget. And when the stock market is volatile, so is the revenue into one of the world's biggest economies. Aditi Roy is in San Francisco.
California's wealthiest residents, which include Mark Zuckerberg, Larry Ellison, Larry Page, and Sergey Brin, pay the most in personal taxes. That's because of the state's progressive tax system, in which the top 1% of taxpayers generate nearly half of California's personal income tax revenue. That also means big drops in the stock market can create volatility in the state's revenues, especially since California's wealthiest residents make a big chunk of their money from capital gains and tech company stock options.
Today, our economy is larger than all but 4 nations in the world. We've created nearly 3 million jobs and put away billions of dollars for a rainy day.
It's a challenge Governor Gavin Newsom, who took office today, will inherit. While the state currently has a budget surplus, experts say a turn in the markets could result in swings in the state's budget. Former Governor Jerry Brown spoke about that volatility during a budget address last year.
The difficulty comes when we have property tax. It was very stable. The property tax has only gone down once since the Great Recession, whereas the income tax have gone down many, many times. And that volatility is what we're trying to face.
One way the state is facing that volatility, its $13 billion rainy day fund. But one tax expert tells us if the legislature approves big new spending programs and if there's a market downturn, that fund would quickly dry up. In a paper released last year, California's Legislative Analyst's Office says that in California, revenues fluctuate in the economy and the stock market more than most other states. The office estimates that the dot-com bust of the early 2000s led to $80 billion in losses. And a mild recession or even deep bear market could result in a $20 billion budget problem.
While Gavin Newsom has indicated he would like to overhaul the tax system, there are few particulars about how he plans to do it. Some, however, worried that any changes would roll the tax burden onto lower income taxpayers. For Nightly Business Report, I'm Aditi Roy, San Francisco.
The White House today said that the IRS will pay tax refunds during the partial government shutdown. That has traditionally not been the case. The IRS has not yet announced a start date to the filing season.
Coming up, price hike. The happiest place on earth just got a lot more expensive.
Here's a look at what to watch for tomorrow. President Trump will address the nation on immigration and the southern border. CES, the world's biggest annual tech show, gets underway as that industry searches for the next big thing. And the former chairman of Nissan, Carlos Ghosn, goes to court in Japan, where he is accused of underreporting his income. He's expected to make his first public comments, and that's what to watch for on Tuesday.
Finally, for tonight, if you're planning a trip to Disneyland, you may experience a bit of sticker shock. The theme park giant is hiking prices once again at its parks. Julia Borston is in Los Angeles with a look at what's behind that increase.
Ahead of a new Star Wars land opening at Disneyland this summer, the theme park is raising prices. Effective Sunday, Disneyland's least expensive daily ticket has jumped above $100 for the first time, now $104. Meanwhile, tickets for regular demand and peak demand days both have increased in price by 10%, while the price for annual passes has increased by 8%. And parking prices are 25% higher.
It's not surprising. It sounds to me like something that any successful company with a quality product like Disney
Disney would be doing in a strong economy. There's clearly been overwhelming demand for the parks in general. Very heavy attendance, including at peak hours. So part of the plan here, I think, is to try to spread the attendance a bit. But also remember, it's a very strong consumer economy.
This price hike comes just a year after Disneyland and California Adventure increased prices by as much as 18%. But that didn't hurt the parks, with both visitor volume and spending increasing. Now these price hikes are part of Disney's preparation for a surge of visitors for Star Wars Galaxy Edge, the 14-acre, $1 billion expansion of the theme park, which will include 2 rides. CEO Bob Iger spoke about expectations for this new Star Wars land in Disney's earnings call in November.
Clearly, it's the biggest thing that we've ever done at Disneyland since it opened in 1955. And we think it's going to drive huge increase in demand. And we think we're going to have some interesting challenges on our hands to manage that demand, but that's a good problem to have.
And Macquarie's Nolan is confident consumers will be willing to pay more.
I would anticipate a lot of people showing up to this new attraction at Star Wars Land. And I expect people will accept the price increase because they want to see that new product. And the Star Wars Land is just another way of propagating the usual Disney virtuous circle of popular content through various different channels.
The risk is if consumer spending slows, if the economy struggles, or if Star Wars Land fails to live up to expectations. We'll see how much a ride on Han Solo's Millennium Falcon is worth to fans. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Here's a final look at the numbers on Wall Street today. The Dow rose 98 points, the Nasdaq added 84, the S&P 500 was up 17. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. We'll see you tomorrow.